What if the biggest crypto bill in US history is about to pass, but almost nobody realizes what's happening behind closed doors right now? More than 100 amendments suddenly hit the Senate. Elizabeth Warren's camp is pushing aggressive changes. Democrats are split. Republicans are trying to force momentum. And now, even the UK is signaling alignment with the United States on digital asset regulation. This is no longer just about crypto. This is about who controls the next financial system. Today, we're breaking down the political battle, the hidden power struggle inside the Clarity Act, why DeFi developers are panicking, and why XRP, stablecoins, and tokenized finance could all be affected by what happens next. Before we begin, nothing in this video is financial advice. Always do your own research before making any investment decisions. If you enjoy grounded crypto coverage without the hype, hit subscribe and turn on notifications, because things are moving incredibly fast right now in Washington. Let's get into it. One of the biggest developments here is that Senate leadership is no longer staying distant from crypto legislation. According to reporting from Eleanor Terrett, Senate Minority Leader Chuck Schumer attended a Democratic member meeting and reportedly encouraged members to get to yes on the Clarity Act, while also emphasizing that ethics negotiations still need work before the markup proceeds. This is a massive signal, because for months, many people assumed Democratic leadership would either stall these bills indefinitely or let Elizabeth Warren completely dominate the discussion. But now, it looks like party leadership understands something bigger is happening. The United States risks falling behind globally if it keeps operating in regulatory chaos. And that pressure is now colliding with election year politics, Wall Street lobbying, Silicon Valley influence, and growing institutional demand for crypto infrastructure. However, the key phrase here is get to yes, not yes immediately. That tells you negotiations are still intense behind the scenes, and the fact that discussions reportedly continued late into the evening suggests this bill is still being reshaped in real time. Now here's where things get messy. Over 100 proposed amendments had reportedly been filed into the Senate version of the Clarity Act, and according to reports, more than 40 come from Senator Elizabeth Warren alone. That number is staggering, because amendments are not just minor edits. They can completely alter the impact of legislation. Some amendments reportedly target DeFi protections, Blockchain Regulatory Certainty Act provisions, non-custodial developer protections, tokenization language, AML and Bank Secrecy Act expansion, and definitions surrounding decentralized protocols. This is the battle line. Not whether crypto survives, but what kind of crypto survives. Because there's a major difference between regulated institutional crypto infrastructure and open decentralized financial systems. One version empowers banks and compliant giants. The other preserves permissionless innovation. And right now, those two visions are colliding inside the Senate. A major concern emerging from these reports is the growing fear that lawmakers could try to regulate DeFi protocols in ways that are technically impossible to enforce. According to advocacy groups following the negotiations, some amendments could expand liability towards software developers, infrastructure providers, or decentralized platforms. And this is where the crypto industry becomes deeply divided, because even many pro-regulation people inside crypto still believe there's a line that should not be crossed, punishing developers for publishing open source code. That's why you're seeing heavy pushback from DeFi advocates right now. And this matters far beyond Ethereum or DeFi speculation, because tokenization, on-chain settlement systems, and next-generation financial rails all depend on programmable blockchain infrastructure. If lawmakers overreach technically, they risk damaging the very innovation they claim to support. And ironically, that could push development overseas even faster. Reports indicate Senator Tim Scott is expected to reject several proposed amendments over drafting concerns, helping pave the way for a partisan markup process. Translation: leadership wants movement, fast, and Tim Scott himself posted publicly, "It is time to make America the crypto capital of the world." That phrase is becoming the core narrative of the pro-crypto legislative movement. Not just innovation, not just consumer protection, economic dominance. Because lawmakers increasingly understand that blockchain infrastructure could become as strategically important as the internet, payment networks, cloud computing, or artificial intelligence. This is now geopolitical, not just financial. And this is where today's development becomes even more important. While the United States debates the Clarity Act, the UK reportedly signaled plans to ease certain stablecoin restrictions after industry pushback. At the same time, industry figures are openly discussing global alignment between US and UK digital asset frameworks. This is a huge deal, because if major Western economies begin harmonizing crypto regulation, institutions suddenly gain clarity to scale globally. And once regulatory certainty arrives, capital moves fast, banks move fast, asset managers move fast. Infrastructure deployment accelerates rapidly. This is why BlackRock, Fidelity, Coinbase, and other giants are watching these negotiations so closely. The winners of the next financial era may not be the change with the loudest communities. It may be the ecosystems that become legally integrated into the global financial system first. Now look at who's publicly backing momentum here. Fidelity reportedly praised the Clarity Act and said it could help ensure U.S. leadership in digital assets. The industry's strategy has changed dramatically. A few years ago, crypto largely tried to avoid Washington. Now, the largest companies are actively helping shape legislation, because Wall Street doesn't want uncertainty anymore. Institutions don't deploy trillions into legal gray zones. And if this bill advances, the market could begin repricing the entire digital asset sector around compliance, tokenization, stablecoin infrastructure, and institution settlement systems. That's the bigger story most retail investors still aren't seeing. Now, naturally, many XRP holders are asking, what does this mean for Ripple and XRP? The honest answer is potentially a lot, but probably not in the simplistic way social media presents it. The real opportunity for XRP is not banks suddenly buying XRP tomorrow. The real opportunity is if regulatory clarity improves, tokenized asset infrastructure expands, cross-border settlement rails mature, and liquidity networks become integrated into compliant financial systems. That's the environment where Ripple potentially benefits, especially if institutions increasingly prioritize interoperability, settlement speed, and regulatory compatibility. But it's important to stay grounded here. The Clarity Act alone does not guarantee XRP adoption. What it does potentially create is a framework where major players can finally operate with less legal uncertainty, and that alone could be transformative for the entire market. At its core, this entire battle comes down to one question: who controls the future financial system? Governments, banks, open protocols, tech companies, or some combination of all four? Because crypto is evolving beyond speculation. This is now about settlement infrastructure, digital identity, tokenized securities, stablecoins, programmable money, and global liquidity systems. And Washington knows it. That's why these negotiations are becoming so aggressive. Everybody wants influence over the rules before infrastructure fully matures. So where do things go from here? We'll be watching closely as the vote is set for today at 10:30 a.m. Eastern. In the short term, expect volatility, political theater, and non-stop headlines. But zooming out, this may become one of the defining legislative moments in crypto history, not because it instantly changes prices tomorrow, but because it could determine where innovation happens, which companies dominate, and how blockchain technology integrates into the global economy over the next decade. And whether you're bullish on Bitcoin, XRP, Ethereum, stablecoins, or tokenization, one thing is becoming very clear. Crypto is no longer outside the system. It is actively being negotiated into it. If you enjoyed this breakdown, make sure to like the video, subscribe, and comment below. Do you think Clarity Act helps crypto, or does it risk turning crypto into another extension of the traditional banking system? And as always, stay sharp, stay informed, and I'll see you in the next one.